Hey everyone, welcome back to Corporate Decoder, the place where we dissect financial secrets and uncover the hidden stories behind corporate filings. It seems like today we have a bit of a debt dance happening for INVO Fertility Incorporated. So let's see what that means for their future. So what we have here is a current report from INVO Fertility Inc. filed on the 29th of September 2025. It's a bit like a company giving a heads up about something important that's just happened. And in this case, it looks like they've made a big deal involving some convertible debentures and preferred stock. The big news is an amendment and exchange agreement that INVO Fertility entered into with a company called 5 Narrow Lane LP or FNL. For those of you who are new to this, FNL is a limited partnership. Now the main event here is that FNL agreed to exchange a debenture type of loan that the company owes them for something called Series C. To convertible preferred street OC, think of it like INVO Fertility saying, instead of paying back this loan in cash, we are going to give you ownership stake in the company in the form of special preferred stock. The specific loan being exchanged is quite technical. It is a second amended and restated senior secured convertible debenture, due the 11th of February 2026, which has now been paid in full and fully extinguished. This means that debt is no longer hanging over the company. INVO Fertility is issuing a significant amount of this series C2 preferred street OC to FNL, the aggregated stated. Value is $1,334,000. Now what makes it convertible is that FNL could potentially convert this preferred stock into common stock in the future. Depending on certain conditions, this gives FNL a path to becoming a more direct owner of the company. On top of the initial exchange, INVO Fertility is also issuing an extra 467 shares of this series C2 preferred street OC to FNL. Think of it as a little bonus sweetener for agreeing to this deal, while the amounts might seem small in the grand scheme of things. For the company, the structure of this deal is what is really interesting. This exchange is being done without registering the securities with the Securities and Exchange Commission, which is pretty common for these kinds of private deals. They are relying on exemptions from registration, which generally means the company believes these are sophisticated investors who can assess the risks without full public disclosure. This is typical for deals in VENs. Olving partnership like investors. Now, about the financials, INVO Fertility is a publicly traded company on the Nasdaq stock market. So they do have common stock registered, but this particular deal with FNL involves preferred stock and is structured as an exchange of debt for equity. This means that while it clears a debt burden, it also dilutes ownership for Exist. In shareholders if that preferred stock gets converted into common stock later on when we look at the specifics of this filing. It is not a detailed financial statement like a quarterly or annual report. It's an 8. K, which is for significant corporate events like this material agreement, the real financial impact like the exact valuation of the preferred stock in relation to the debenture and the potential dilution will likely be seen in future SEC filings when we get to see their actual balance sheets and income statements. Let us dig into what this means for INVO Fertility. By converting debt into equity, they are reducing their liabilities, which is generally a good sign for financial health. It means less pressure from interest payments and a clearer path to profitability. However, it also means potential dilution of ownership for existing shareholders. If FNL converts their preferred stock into common stock, the ownership pie gets divided into more pieces, making each existing share worth a little less. The company is essentially swapping a fixed obligation, the debenture, for a variable ownership stake preferred stock. The success of this move hinges on INVO Fertility's ability to grow and increase the value of its common stock enough to offset any dilution and make this an attractive deal for both parties in the long run. The risks here are tied to the company's future performance. If INVO Fertility doesn't grow or its stock price doesn't increase significantly after this exchange, investors might be concerned about the long-term value. On the other hand, if the company thrives, the conversion of this preferred stock could become a powerful tool for future growth financing. The company is betting on its growth trajectory and its ability to potentially increase its shareholder value. Substantially, this deal suggests they are prioritizing deleveraging and providing flexibility for future capital needs. Alright, that is our breakdown of INVO Fertility's latest filing. What is your take on this debt for equity swap and what they signal for the company? Future, drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into corporate filings. Don't forget to check out our Discord community, linked in the description below for more discussions and insights. Thanks for watching. See you next time.